Welcome to Tax Roadmap. I am Nafisa Munir, your tax attorney and CPA who rescues businesses and individuals with tax debt and trains the next generation of tax attorneys and CPAs to do the same. Again, welcome today to Tax Roadmap. I'm so excited you decided to join me today. And we're going to dive right in, jump right in to the tax topic of today. And that tax topic is, what's your type? I mean, your tax type, of course. And before we get started, go ahead and make sure you subscribe and like my channel so you can be alerted every time I drop something new. So what's your tax type? What we're going to talk about is before you jump into this industry, right? Or you're trying to determine about whether you want to specialize in tax representation, specialize in tax controversy work, you need to know about the different types of taxes, the main types of taxes that you're going to be dealing with when you take on clients with tax debt. So that's what we're going to talk to you about today. What's your tax type? All right. So the first tax type we're going to talk today is the one that most everyone is familiar with, which is the income tax, right? Because we're in tax season right now, right? So most everyone is filing their taxes or filing their extensions, right? So you are paid or you have paid throughout the year taxes on your income, on your salary. You may maybe estimated payments. If you're a small business owner, you may estimated tax payments throughout the year. And if you might owe, a little bit, hey, you're going to be paying that bill when you file your taxes this year. But that's again income tax, right? And that's based upon your income, how much money you make, whether it's through your job, whether it's through you being a contractor, whether it's through you having a small business, you owning real estate. That's going to be what's called income tax. And those rates are going to be anywhere from 10 to 37% is the highest, but that's going to be income tax. And remember, if you are a U.S. citizen, the United States government taxes your income, no, irregardless of where you made that income and irregardless of where you are. So wherever you are in the world, it doesn't matter. If you decided to go live over in Bali, right, for a month, or you decided to go live over in Kenya for 6 months, if you're still a U.S. citizen, the U.S. government's position is they tax income worldwide, no matter where it's made and no matter where you are when you make it. Okay, so just keep that in mind. That's income tax. That's our first type of tax that you're most familiar with. The next is a capital gains tax. And for the most part, you might be familiar with a capital gains tax because you file this on your regular tax return that you file every year anyway. If you own any stocks or bonds that you might have sold, you would have a capital gains tax on that. That's just a separate type of tax. And a capital gains tax is usually going to be for assets that you hold for investment purposes, right? So you're not using these assets to generate your daily income or anything like that. You're holding these assets for the investment value over the long term. So you are banking on the appreciation in this. So this also real estate qualifies. A lot of real estate qualifies in this area too, particularly if you're owning rental property or your own personal home, that type of thing. Capital gains tax is subject to capital gains tax. And capital gains tax, I'm not going to get too technical here, but there is a short term and then there's long term. Short term meaning you held it less than 12 months, long term longer than 12 months, 12 months or longer, right? And so the short term rate is going to be the same as your regular income tax. It's going to be anywhere from 10% to 37%. If you hold that particular asset long terms, then your capital gains, long-term capital gains rate is going to be taxed anywhere from 0 to 15 to 20%. Now, again, you as a tax attorney or you as a CPA who is representing someone in tax debt, you don't necessarily need to know how to do all these calculations, but this is just general language that you should know. right? Because you're going to be representing your client. You might be reviewing their tax return. There might be certain stipulations if you are representing them in an audit. There may be particular items of income or items of a capital gain nature that may be an issue. So you need to know these general classifications of taxes for that particular so you can know it. All right. So the third type of tax is going to be your estate tax. And this is lifetime. A lot of people like to refer to this as the death tax, right? So this tax does not come into play until you pass or your client passes or your client's spouse passes or someone that your client is familiar with, and they are then subjected to estate tax. Now, estate tax applies to anyone unless you are exempt. And for the most part, what it is now is there is a certain amount that is exempt from estate tax. And right now, that's in 2024, I think it was like 18 million. So if your estate is worth more than 18 million, then your estate could be subject to estate tax. And I think for 2025, it's going to be 19 million. So again, if you pass or your client passes or someone that your client is associated with passes in 2025 and their estate is worth more than 19 million, they would be subjected to estate tax. And keep in mind, this is a high rate. So I know if you are just now getting started in the tax controversy area, you're just now getting started in the tax representation area, don't sleep on this exemption if thinking that, oh, what most of the clients that I'm going to target, they're going to be way under that 18 million, because this is set to change in 2026. Originally, before the Tax Cuts and Jobs Reduction Act, it was at 5 million. So if you're dealing with clients, particularly a lot of those that may own real estate, okay, it can fall back to 5 million unless they amend it, because this the current exemption amount is set to expire in 2026. So Congress would need to enact new laws to make this either a permanent, the 18 to 19 increase with inflation, make this a permanent tax cut, or right, reinstituted again for a temporary tax cut before another renew it basically for another 5 or 10 years. Okay, so just keep that in mind. Right now, 2025 is at 19 million, that exemption. So maybe none of your clients or none of the clients that you're going to target all your clients are going to be under that. They may not be subjected to that state tax, but just keep in mind, if this temporary tax provision is not renewed in 2026, it will drop back down to 5 million, the exemption. Okay. So keep that in mind for clients that you might want to have in the future. Okay. And I'll keep you updated on that. If that happens, when it renews, or if they let it expire and they don't renew it at all, I'll let you know. I'll give you an update on that. But just keep that on your radar. Okay. The other fourth thing, type of tax you want to keep your eye out for and know about is the gift tax, right? The gift tax. Now, everybody who gives a gift is subject to this gift tax unless it is specifically exempt. Unless it is specifically exempt. So anytime you give away or your client gives away any type of gift, and a gift is just defined, they gave something and they didn't receive anything in return. That's what a gift is. So it doesn't always have to be cash. It can be a car where the fair market value is a certain amount. It could be anything that they given away that they didn't receive something in return. That is considered a gift. Now they will be subjected to gift tax though. It used to be 15,000, but I think now it is 18. Yeah, at 2024, it was 18,000. So in other words, your client can give away up to $18,000 per person without having to pay gift tax. If they give them $20,000, right? Then guess what? They're going to be subjected, have to pay gift tax. Okay. And I think, and that's also indexed to inflation. So I think in 2025, this year it goes up to $19,000. So your client can give away to each one of their children if they want to every year up to $19,000 or whatever it is in that year that they gifted without being subjected to gift tax. So keep that in mind. All right. Now, there are specific exclusions related to like education and medical expenses. If it's any type of education, like they pay for their tuition or college or whatever, that's going to be exempt. They're not going to have to pay gift tax on that. Or if they paid any type of medical expenses, they're not going to have to pay gift tax on that. But just keep that gift tax in mind because that may be something, an issue that you deal with, right? And then payroll tax. Now, payroll tax, of course, is going to be what? Your Social Security tax, your Medicaid, Medicare tax, and really your unemployment tax, right? Because businesses are supposed to be paying federal unemployment tax, right? So these are the types of payroll taxes. And then also withholding and stuff like that, you know, if they have employees. That's all going to be under the guise of payroll tax or employment tax. So you will have to know about those. Now, in practice, the most common ones that you're going to come across are going to be what? Your income tax and your payroll tax. Those are the two types of taxes that you're going to deal with. I would say 99.99% of the time, unless you are strategically targeting very, very high net worth individuals. If you are strategically targeting high net worth individuals, then you might have to deal with some estate tax issues if your client or your client base is over is usually $20 million or up, or if your clients again has a significant assets and significant income where they're giving away a lot of money every year, and that would be subjected to gift tax. So you might have a gift tax issue. Okay. But I've been doing this work since 2013. I have not had a state tax issue that I had to deal with. I have not had a gift tax issue, right? Because the majority of my clients that I target are small business owners, and they usually have under that $20 million in terms of net worth, in terms of assets, in terms of income. Okay. But if you choose to target in that, you will maybe have to deal with some of those issues. So, what's your type? Those are the main types that you're going to deal with as a tax representative, as a tax controversy specialist attorney or CPA. That's going to be your income tax, your capital gains tax, your estate tax, your gift tax, and your payroll tax. And these are the taxes that are handled through the IRS. So we're only talking about federal level. We're not talking about state tax issues that you may represent your client for, right? Because every client that I represent, I also represent them on the state tax. So from state tax perspective, you might still have your state income tax, your state estate tax, and your state payroll tax, right? And in addition to that, you might have your state sales tax, because sales tax is not a federal tax. It's administered at the state level. And a lot of times I deal with clients who run into sales tax issues because they fall behind with their sales tax. So those might be issues that you might encounter. So those are the tax types that you will encounter as a tax representative, specialist, as a tax attorney, a tax controversy specialist. Those are the ones you would deal with. Thank you for joining me today. Again, I'm Nafisa Manira, your tax attorney and CPA. And if you want to learn more about this information, make sure you contact me. Make sure you like and subscribe to my channel so you can be alerted the next time I post. Bye. Have a fantastic day.